Stablecoin pilots rarely die on-chain. They die in the back office when the finance team cannot close the books and quietly stops trusting the numbers. Reconciliation is the least glamorous layer of the stack and the one that decides whether your program survives. The problem, precisely. You now have three ledgers telling three stories. The chain, which is truth but speaks in transaction hashes. Your bank, which speaks in batches and business days. And your ERP, which speaks in invoices and cost centers. Every payment must produce one consistent story across all three, and by default, it produces three fragments. Gas costs vary per transaction, so amounts never match to the cent. Refunds arrive from addresses you didn't pay. One customer invoice settles as two on-chain transfers. Multiply by thousands per day, and drift becomes a full-time department. The fix is one design decision made before the first payment, a single payment identifier that travels end-to-end, born when the intent is created, attached to the on-chain memo or mapped to the transaction hash, carried into the ERP entry. With it, matching is a database join. Without it, matching is a human with two screens, and that human is your real scaling limit. It is the cheapest infrastructure you will build and the most expensive to retrofit. On top of it, three structures. First, an event-sourced internal ledger. Every state change, created, signed, confirmed, final, reconciled, is an immutable event, so any balance at any moment is replayable. Auditors accept replayable. They argue with editable. Second, an automated three-way match that runs continuously, not at month end. Chain versus internal ledger versus ERP, with every mismatch becoming a ticket the same hour it appears. Exceptions age badly. A mismatch investigated same day takes minutes. The same mismatch at month end takes a meeting. Third, metadata at creation. Invoice reference, tax category, counterparty, corridor, stamped when the payment is born. Enrichment after the fact is archaeology. One conversation to have before the pilot, not after. Sit with your auditor and agree the accounting treatment of your stablecoin balances in writing. Treatments vary by holding purpose and jurisdiction, and quarter end is the most expensive possible moment to discover a disagreement. The payoff is measurable, and it is the metric your pilot already reports. Reconciliation hours. Programs with payment identifiers and continuous matching run near zero manual hours per corridor. Programs without them burn hours daily and scale headcount with volume. The same automation collapses month-end close on these flows from days to hours. Treasury seeing settled truth continuously instead of waiting for statements. The Monday directive. Define the payment identifier and make it mandatory in every system that touches money. Stand up the event log and the continuous three-way match before the first production dollar. Stamp metadata at creation. Book the auditor meeting this week and track reconciliation hours per corridor from day one. It is the single most honest health metric your program has. Next episode, the pilot playbook. One corridor, 90 days, and the baseline that makes your results undeniable.